Blockfi agreed to a $100 million settlement paid to the SEC and state regulators in what's currently the largest settlement to date for the crypto industry. The regulatory concerns in relation to this settlement are regarding their interest account and their lending product on the Blockfi website. This settlement is the first and largest of its kind in the crypto industry. I'm no expert, but I know a lot of people have just come into the crypto market in the last year or two, so I just wanted to come on here and make a quick video talking about my concerns and my thoughts moving forward. Welcome back to the channel, guys. My name is Taylor, and as I said, I'm no crypto expert. I didn't script anything out. I just wanted to come on here and talk about a few things, so I jotted down a few notes, and let's get into it. So to set a little backdrop, Blockfi is a crypto company that allows you to store, buy, and sell crypto assets on their website and on their app. Blockfi has a range of different products and services, including lending against crypto collateral, interest-bearing accounts, an exchange that allows you to buy and sell Bitcoin, Ethereum, and other crypto assets. They even offer a credit card that pays cash back in Bitcoin. Blockfi is a big player in the crypto space, and they've been considered a pioneer in many of these different products. What exactly happened? Blockfi has been under scrutiny since about the summer of 2021 over their lending protocol and their interest-bearing accounts that pay the rewards in crypto assets. The SEC is essentially saying that they have to securitize this, and they're considering it a security, which means that it would have to be registered with the SEC under the Securities Act of 1933. Blockfi was not the only one under SEC scrutiny. There were multiple other companies, but Blockfi is the first to agree to a settlement. In the agreement, they agreed to pay a $100 million settlement to the SEC and various state regulators. I believe the number is 32 different state regulators. They agreed to register their products with the SEC, and Blockfi will be able to offer the interest-bearing accounts to new users again after they have been approved by the SEC in the filing. So to create a little foundation here, let's discuss how banks and financial institutions make money. One of the primary ways that banks make money is by paying out less interest than they collect on the loans that they lend out. Specifically, people that deposit money into the bank might receive 0.1% if they're lucky on the deposits that they have at the bank. But if I'm starting a business and I want to take a loan from the bank in order to help me do so, I'm going to pay a much higher interest rate back to the bank, and they profit the difference. So let's say that I deposit $10,000 into the bank, and then you go and you take a loan for $10,000. If they're paying me 0.1% on my $10,000, but collecting 5% from you, then they profit 4.9%. So this is obviously a way that crypto companies make money as well. One of the differences is crypto companies have a huge imbalance in the supply and demand for deposits versus lending in crypto assets. So there literally could be tens of billions of dollars worth of demand for crypto lending while the deposits have yet to catch up. So just based on simple economics, if there's much more demand than supply, obviously the people that want to loan money from the crypto companies will pay a much higher interest rate. These crypto exchanges, however, are paying out a much larger portion of the interest that they receive back to the depositors. I would think these exchanges do this to encourage more deposits into the crypto exchange. If they pay a higher interest rate on deposits, then they get more influx of capital. So what exactly is the SEC saying with all this scrutiny? The SEC is essentially saying that these crypto companies are lending out securities by lending against crypto collateral. And if it's considered securities, then they must register with the SEC under the Securities Act of 1933. The crypto industry has largely been an opaque industry for the last several years. There's not much transparency in the industry and how these companies are making money. Yes, we know that they're lending out money at a higher interest rate than they're paying out, but we don't actually know who's loaning money from these crypto exchanges. We assume it's larger institutions, but we have no way of verifying this. There was actually an SEC filing in November of last year that proposed a rule that would require any entity lending securities to report the material terms of the transactions in order to increase transparency. If they're trying to securitize their crypto assets or call them securities, then obviously the crypto companies would fall under this rule. I don't believe that has gotten passed yet, but you can find a link to that filing in the description below. So in essence, the SEC and state regulators are arguing that Blockfi and other crypto companies are offering a debt security without registering it with the SEC, which is obviously illegal. One of the issues I have with this is that traditional banks are able to offer interest-bearing accounts and traditional lending without having to register them as securities. The only differentiation that the SEC could make is that these are not US dollar-backed loans. The fact that the SEC and state regulators are arguing that Blockfi is offering a debt security is a bit odd to me. I guess my thought is that they're saying that since they're lending crypto, that makes it a debt security. However, crypto is currently taxed as property, as if it is a natural currency. So I'm not sure that I'm in agreement with the SEC in this situation. I don't believe this could be considered a debt security, but obviously I'm not an expert and this is just my opinion. Okay, everyone. Firstly, I want to thank everybody for watching this far in the video, and I want to go ahead and apologize for the tardiness of the video. It was actually filmed a couple weeks ago and I had it all edited together, and I ended up having some technical difficulties with Adobe Premiere. Some of the clips got corrupted and I was actually not able to get the project off of Adobe. It wouldn't render. So you may notice some of the footage in this looks a bit odd, and that's because I literally had to screen record the video on Adobe and try to save it from there and then just import into the new software that I'm using. I had already put in a good amount of time filming and editing, so I didn't want to just scrap the whole thing. So I figured this could be considered a type of transitional video, and I want to assure everyone that some higher quality editing will be in the near future, as I'm going to dig in and learn all there is to know about the editing process. So I hope you guys will understand this one time, and I'm not the most tech savvy person, so I consulted a few people I know to get some recommendations and advice. And I'm now finishing this up on my new MacBook and Final Cut Pro. So I'm now 100% Team Mac. So hopefully this will be an easier process in the future. Once again, thank you guys, and let's get back to the point of the video. So what are some of the terms of the new agreement? The first being it's only going to affect US-based accounts. Any balances that were earning interest before the agreement will be grandfathered in and continue to earn interest. New accounts and new assets transferred into the account will not be eligible to receive interest until Blockfi completes the registration filing and gets approved. And if you transfer money between the Blockfi interest account and the wallet in order to trade, those assets will not receive interest when transferred back into the interest account. So what do I think could happen now? My first thought is that this could end up being a pretty big competitive disadvantage for US-based crypto companies, as I think funds are always going to flow to the conditions that are most advantageous for business to be conducted. If the SEC is making it this much more difficult to service US-based customers, money likely flows to a more relaxed conditions over the short term until all this can get sorted out and adjust over the long term. My second thought is that this could pioneer a way for people to generate much higher yields on their deposits in a regulatory compliant manner, which could result in more deposits, which might be an odd thing to happen to the traditional banking system. So let's talk about that. So what could this mean for the traditional banks that you're used to? I believe that as the crypto industry becomes more transparent, if these large yields are continuing, traditional banks are going to see less deposits, as nobody's going to keep their money in a checking or savings account if it's earning them pennies whenever they could earn near double digits APY on their deposits in a crypto company. Yes, we obviously see an issue because the crypto deposits are not FDIC insured, but as inflation runs away, I think we've seen that a lot of people are more apt to take on a little bit more risk in order to generate a little bit more return. If they're choosing between 0.1% and 9% APY on their deposits, I think the choice is clear. Another thing that I could see moving forward is that there was probably a lot of capital just sitting on the sidelines that were waiting for some regulatory clarity in the crypto industry. This could create a large inflow of capital into the crypto industry, which might drive prices higher, which is obviously good for everyone, because these new investors and new depositors are going to have access to a high interest-bearing account. This could be a huge positive impact on everyone's portfolio, and I think it's great moving forward. On the flip side of that, one of the greatest benefits of the crypto industry was the decentralization of it. So I could see many people that favor that as one of the biggest reasons they invest in the crypto industry, as being a negative with all the regulations that could come because of this. So really what I'm saying is I don't know what's going to happen, but this does create a historical moment in the largest settlement that's ever been paid by a crypto company, and I think it only paves the way moving forward. Again, I'm not an expert and I have no affiliation with Blockfi other than that I am an account holder there. These are just some of my thoughts, and obviously they should be taken with a grain of salt because I'm just some random guy on the internet. So as always, thank you guys for watching the video. Please like, comment, share, and subscribe so that we can grow the channel, and I look forward to seeing you guys in the next one.